Welcome on board Dipan Mehta, Director at Elixir Equities, joining in the show right now. Dipan, hi, afternoon. Good to have you on the show. What's it that you've been doing in the market? Just riding the wave, or is there anything where you've profit taken or maybe even added positions?
Good afternoon, and thank you for having me on your show. No, I think we are just been pretty much quiet in the market at this point of time. The valuations certainly are not comforting, and we are sitting on a reasonable amount of cash for the time being, waiting for a correction whenever that comes. It's been quite a while. I think since COVID, we haven't seen a serious correction, and markets have kind of absorbed all the positive news flow. So we do feel that there could be some technical correction also could take place. Whenever it does, we are ready with our stock list and ready with our cash to invest. But chasing values at these levels doesn't make sense. And that I think I speak more out of experience, having seen so many bull markets, that if you tend to buy at the tops, then 2, 3 years down the line, the returns tend to deteriorate. And right now, I think valuations are really rich for a lot of good quality businesses, and finding new stock ideas is really a challenge as well.
Finding the right stock at the right price is clearly a bit of a challenge right now, but just taking a look at what's happening to the frontline index, because we are at the highest point of the trading session. Just wanted to check as to which are the stocks which are actually driving this up move for the market. ITC, of course, was something that was doing quite well in the trading session. It's contributing 13 points. Bharti Airtel has managed to perk up. Titan, HUL, TCS, these are some of the other names which are in the green. But private banking names continue to lag. In fact, private and public bank both, so HDFC, ICICI Bank, SBI, they continue to be under pressure. Dipan, at a time when you are saying it's difficult to find value and a lot of stocks have run up, you do have banking names which are available at a price which is of course much cheaper than what the peak has been. Some of these stocks have practically given no returns in at least last 12 months. Would you be a buyer on dips for these stocks then?
Not really, partially because a lot of stocks already are overowned, and in a lot of portfolios, including ours, we are owning a lot of banks. Optically, they are cheap, but these stock prices have gone nowhere because, A, as I said, they're overowned. B, they are the favorite counters for FIs to target their selling when they are trying to liquidate their holdings in India. And also, the third aspect is that growth rates certainly have slowed down. A sense of stagnancy has come through. In the case of banks, the key parameter to measure growth is pre-provisioning profits, and those clearly have flattened out for various reasons. And even the growth rates, credit growth, deposit growth has slowed down. So in a slowing environment, you can expect the P multiple price to book to get compressed. But I'm still hopeful of the long-term prospects of the banking sector, and we remain invested in top banks, be it PSU, private sector, and wait for the cycle to turn around for these banks, and at that point when they can again get leadership position. But for the time being, I think it's best to just stay cautious. But yes, in your portfolio, if you are underweight banks and you are sitting on some cash, then this is a good contrarian play, and you could look at buying into some of the banking shares as well.
Get in some BTST trades as well on that note then. Naresh, let's have your list first.
So first would be a buy on Hindustan Unilever. We've seen a good breakout in the whole FMCG pack, so expecting this to follow up. Stop loss at 27.65, target price of 28.15. Second is a buy on HDFC Life, which has given a new 52-week high today. Stop loss at 715, target price of 750.
Both Unilever as well as HDFC Life coming in from Naresh. Kunal, what about your BTST ideas?
So I'll go with the buy on TCS. That's a chart which is looking attractive. One of the best performing stocks in the IT space over the last few weeks. So would look out for targets in the range of 46.50. Stop loss could be kept at 44.50 now. And the second would be buy on ITC. That stock is also inching towards a breakout about the 505, 510 range. It's a major resistance for the stock. But looking at the recent bout of momentum, expecting this breakout to happen pretty soon. Buy with a target of 525, stop loss at 490.
Naresh, what about the charts of CESC and Power Grid? CESC has had a very good run, and we should probably pull up a 3-month or a 6-month chart, because that will tell you the kind of re-rating that one has seen. And Power Grid, it keeps on getting these bouts of sudden buying interest and then sideways moves, etc. What one should do with stocks like CESC and Power Grid right now?
So CSC has been in a strong uptrend ever since it broke out around that 90-100 mark, and the power sector has done well. This was the last one to catch up. After the recent move to 190, the stock has consolidated also for a period of 1.5 months. So the trend is still positive. One could look at again making a move towards 200, 220 levels. On Power Grid, looks like a sideways consolidation going on after that consistent move over the last 1.5 years. Any dips back to 300, 310 would be a buying opportunity for now. Apart from that, if it starts sustaining about 355, that would be a fresh breakout. So if in this dip, if it continues to dip a little more lower, would be a good opportunity.
Bunch of other buzzers in trade today. We've been highlighting PNB Housing, which is up a staggering over 8%. That 5.5% equity block deal that happened earlier today. And the likely seller seems to be General Atlantic Singapore Fund, which has offloaded its stake in this one. At the meantime, there's also Genus Power. That's quite interesting. In fact, the run-up in the stock has been quite staggering. They won 3 letter of intents worth about almost 3,600 odd crore rupees with supply, installation, commissioning with FMS for about 4.26 million smart prepaid meters. The total order book for the company now stands at a staggering 28,000 crore rupees. Dipan, you know, as limited as the listed space may be when it comes to smart meters, but clearly this is one space wherein you have small players like a Genus Power now becoming big, and then of course you have big mega corporates like Adani's as well into that same business. Opportunities here, you think, and should one not look at valuations and the run-up in the stocks?
No, I think Genus Power has been a great wealth creator, and it's a multi-bagger stock. A lot of investors did ride this particular stock, and the key aspect, of course, is the multi-year kind of order book position, which provides a lot of earning visibility, and they've been good at execution also, which is reflected in good appreciation or increase in the turnover and profits as well. Maybe at an opportune time when it is available at a reasonable valuation, when there is an overall correction in the market, that may be a good entry point. But what Genus Power does, I think very few other companies are in the same line of business. It cannot be compared to Adani or any other utility company. We are seeing there's a huge menace of power theft, and companies like Genus Power have a very important role in trying to improve the yields or realizations which transmission companies can get from their network. So it has a long, I would say, great runway for road and excellent prospects. And you can I'm just astonished at the order book position and surprised why there are not more players in this business.
So that's the word on Genus Power. In fact, yes, a lot of these smart metering plays, the likes of HPL Electric, etc., have done well. GMR Power also is getting into the smart metering space because there's a huge opportunity there, and some of these companies have bagged large orders to back their order book as well. What else is happening in the market right now, where Narayana Health is actually seeing a bit of a perk up? Lemon Tree Hotels is also doing quite well. Kalyan Jewelers is the other one which is holding up smartly. On the losing side, Maharashtra Seamless is coming under pressure. Angel One is down as well. From the F&O universe then, Jubilant Foodworks has had a good run, and RBL Bank as well. Bandhan Bank, I think Kunal just talked about. Kunal, Jubilant Foodworks as well as Varun Beverages, what would be the view?
So both of the stocks are bullish. Jubilant Foodwork, in fact, the stock has completed a very huge kind of a pattern. It's a double bottom pattern on the monthly charts for Jubilant Food. The stock taking support at 450 mark. I think a couple of months back, the breakout point for Jubilant Food was around the 555, 560 mark, and from there on the stock has looked very attractive. So I think from that point when the stock completed this double bottom formation and the breakout above its 200 DMA, we've seen a different kind of a chart price pattern for Jubilant Food. The stock has been a lot more consistent, very less degrees of volatility for the stock price. So I think that indicates that on the way up, the stock would probably see a lot more higher volumes, and on the way down, whenever the stock gets into a mild corrective phase, the beta of the stock would drop down significantly. Varun Beverages, on the other hand, the stock in the last few weeks has been a lot more volatile. We've seen the stock recently correcting from 1700 to almost 1420, 1425, where it coincided with the key moving average for Varun Beverage. But from there on, we're seeing a bounce into the stock price. It's still not retraced more than 50% of that 350 odd point correction from the recent high. So we'd probably wait out for maybe another 50 to 70 points on the upside. Say if the stock crosses 1600 levels, we could be looking at a strong revival prospect for Varun Beverages on the short term aspect.
Okay, point taken. So that's the view coming in as far as Varun Beverages is concerned as well. You do have Manappuram, which is actually holding up. Motherson is doing quite okay. However, having said that, Godrej Properties is coming under pressure, Aurobindo Pharma, Dr. Lal Path Labs as well. Dipan, what's your take on autos? Because that sector was doing very well. We were all talking about the SUV craze that had taken over, the EV tailwind and all of that. But there are chinks in the armor now. Inventory seems to be piling up. There are these murmurs of higher discount. Not sure if the street is making too much of all of this news flow. How should one weigh in on the auto sector right now?
Yeah, also, and you could add that monthly volume figures have certainly come off. And the kind of benign raw material scenario which they had, that may not last going forward as well. There could be pressure on bottom line. A lot of the premiumization play also is over and done with. But this is a bull market, and a lot of positive news is getting, the negative news is being ignored. So I'm very cautious on auto shares at this point of time. There could be a cyclical downswing. It could take 2 to 4 quarters. Long-term prospects are great because of low penetration, but we should expect lower profits or flat profits for almost all auto companies over the next 1 year or so. And I don't think that's completely been factored in the stock price. So you could expect auto to underperform. But if you have a long-term view, 3, 5, 10 years or so, then I think you're still fine. But you need to keep in mind that there's a huge disruption also taking place within the auto industry in terms of competition from EVs. And how that shapes up is a key monitorable.
Okay, so that's the take coming in as far as the auto sector is concerned. But yes, Ola Electric, the latest debutant there, has had a good run. Today, of course, it's a bit somber, but nonetheless, just watching out for how the space is overall tracking at the moment. Overall, for the markets, we're holding on. There's no major news flow which is expected tomorrow as well. So it's a very sort of a subdued week that we have. Yes, global cues are there with respect to the Jackson Hole Summit, but not a direct correlation. Tomorrow, of course, is going to be the weekly options expiry. Ahead of that, Naresh, would you be carrying forward any trades?
So continue to be bullish on the overall index. Maybe Bank Nifty could be a trade going forward. Because today has been a good recovery from the lows in the last 1 hour. So it could see a follow-up and maybe cross that 51,000 mark.
Okay, just about winding up trade as well. Dipan, Kunal, Naresh, thank you all of you for joining in for the last lap of the trading session this afternoon.
If you like this video, then like, share and subscribe to ET Now.